$10,000 sitting in SCHD for just 30 days can quietly generate more passive income than most people earn in a full week of work. This is about one of the most powerful dividend ETFs available to everyday investors right now. But here is the part almost nobody calculates correctly, and if you miss it, you could be leaving serious money on the table every single quarter. If this is your first time here, welcome. On this channel, we break down dividend investing, ETFs, and passive income strategies in ways that are actually easy to understand and act on. If you want to build real wealth through smart, consistent investing, hit that subscribe button right now and tap the bell so you never miss a video. Now, let us get into it. Let us start with the basics. SCHD stands for Schwab U.S. Dividend Equity ETF. It tracks high-quality U.S. companies that have a consistent history of paying strong dividends. We're talking about real companies with real cash flow. Think Johnson & Johnson, Coca-Cola, Home Depot, Verizon, the kind of businesses that keep paying you whether the market is up or down. SCHD does not chase growth stocks or speculative plays. It targets dividend sustainability, dividend growth rate, cash flow to total debt, and return on equity. That combination makes it one of the most respected dividend ETFs in the entire market. It's low-cost, diversified, and built for the long game. If you're serious about passive income, SCHD belongs in your conversation. Now, let's talk about what $10,000 actually does in 30 days inside SCHD. The fund currently yields around 3.5% to 4% annually. That means in a full year, a $10,000 investment would generate roughly $350 to $400 in dividends. Divide that by 12 months, and you're looking at approximately $29 to $33 per month in pure passive income. Now, you might be thinking that doesn't sound like much, and you're right if you stop there. But here's where it gets interesting. SCHD pays dividends quarterly, so your first actual cash payment would arrive in the next scheduled distribution cycle, not literally on day 30. But what day 30 gives you is something arguably more valuable: price appreciation potential on top of dividend accumulation. Here's where most investors completely miss the point about 30-day ROI. They only count the dividend check, but your actual return includes price movement of the ETF itself. SCHD has historically delivered strong total returns, including both price appreciation and dividends combined. Over the past decade, SCHD has averaged somewhere between 10 and 13% in total annual return, depending on the time frame you measure. That means in a favorable 30-day window, your $10,000 could gain 2 to 3% in price alone before a single dividend is even paid out. Combine that with your accruing dividend, and your 30-day total return picture looks dramatically different from what the yield number suggests on the surface. This is why total return matters more than just chasing the highest yield number you can find. Let's build out a realistic scenario. You invest $10,000 in SCHD today. Over 30 days, assume the ETF price increases by 1.5%, which is conservative based on historical data. That gives you $150 in unrealized price gain. Your dividend accrual for 30 days at a 4% annual yield adds roughly $32 in earned income that will be distributed at the next quarterly payout. Your 30-day total return in this scenario sits at $182 on a $10,000 investment. That's a 1.82% return in just 1 month. Annualized, that number starts to look very compelling, and that's with a conservative price assumption. In stronger market months, those numbers climb significantly higher. Now, here's the compounding angle that changes everything for long-term investors. If you reinvest those dividends automatically using DRIP, that's the Dividend Reinvestment Plan, your shares grow every quarter without you lifting a finger. Over 5 years, a $10,000 investment in SCHD with reinvested dividends could grow to somewhere between $15,000 and $18,000, depending on market performance. Over 10 years with consistent reinvestment, you could realistically be looking at $25,000 to $30,000 from that original $10,000. The income produced by that position also grows each year because SCHD has raised its dividend consistently over time. You're not just getting paid more shares, you're getting paid more cash per share as the underlying companies raise their own dividends annually. Let's talk about risk, because no investment is without it. SCHD is not a savings account, and it's not guaranteed. In a bear market or economic downturn, the share price can drop. In 2022, SCHD fell roughly 23% from its peak. That's a meaningful drop. If you had invested $10,000 at the top and checked 30 days later, you could have seen a temporary loss of several $100s. The key word is temporary, because the dividends kept coming. The companies inside SCHD kept paying, and investors who held through that period recovered fully and then some. SCHD is designed for patience. It rewards investors who stay in the position through volatility, not those who panic and sell at the bottom. Understand the risk, accept it with a long-term mindset, and it becomes far more manageable. Here's your action step. Open your brokerage account today, Schwab, Fidelity, or whatever platform you use. Search for SCHD. Look at the current yield, the expense ratio, which is just 0.06%, and the trailing 5-year total return. Then decide how much you want to allocate. You don't need $10,000 to start. You can begin with $100 and grow it over time using dollar cost averaging. The important thing is starting, because every day you wait, you're missing dividend accrual and potential price appreciation. The math rewards those who act, not those who wait for the perfect moment that never comes. If this video helped you understand SCHD and what your $10,000 could really do, please hit the like button right now. It genuinely helps this channel reach more people who need this information. Share this video with a friend or family member who is trying to grow their wealth through dividends. And if you haven't subscribed yet, do it now and turn on the notification bell so you never miss our next breakdown. See you in the next one.